what is the purpose of objective or statutory audit, and what do you mean by opinion. There are three things are there: very strict procedures and guidelines. Okay, there are strict procedures and there are strict guidelines. Okay, and guidelines about what is the procedures of the appointment, removal, and resignation. What are the regulations of auditor and what are the ISA, International Standards of Auditing. If you see the things, they mention, these are the things, learning. Describe the regulatory environment. Is that what? See, auditors will also have their own environment. Is that how we have to conduct our external audit? Okay, how we have to conduct our audit. Auditors will have reasons and mechanisms, specific things, procedures for regulation. See, everybody will not get an audit license. If you take anywhere, is that if you take our country also, they will not, see, they have to apply and based on some qualifications, because they are giving a certificate to the business how it has to be done. Okay, what is the regulations for the auditors, and auditors have very strict, is that ACCA code of conduct says if they find any reasons, they will cancel the license. It is like when you are talking about ACCA, it is a license given by the ACCA to do audit with the help of the certification. Explain what are the statutory regulations regarding appointment, what are the rights of the auditor, how we are going to have, if you want to remove, what are the procedures, and if you are going, what is the designations. Is it? See, before appointment, you have been appointed as an auditor. Is it? You have some procedures, what you have to take the review, or you have to take the opinion of the past going auditor. Past going auditor says that yes, it can be appointed. For how many years you can be appointed? Is it how, if you want to replace an auditor, what is the procedures? If auditor wants to give resignation, what are the terms and conditions? Is it? And explain the status of ISA. We are having IFRS for reporting, IAS for accounting. In the same way we have for auditing, ISA standards. In section B, whenever they ask you the questions, we have to give, there are very few limited standards are there who will be tested, but you have to give references for ISA. The relationship between international account standards of auditing and the national standards. We will cover in detail about this. See what they say, see the thing, the same thing they have reflected, statutory requirements, you have the regulatory, as per the rules of both, you have to take the national rules, you have to take the ACCA rules, okay, statutory by default, as per the government terms and conditions, mechanism, how we have to have a regulation, and most importantly, how it is going to be ICA. Is that they say, if you take the things, the first and foremost is International Federation of Accountants. They will ask a question, 2 marks question, MCQ. These are the things that has been developed over a period of time. You have code of ethics, is that ethical? We will cover this in chapter 3 or 4. Is that ethics in auditing? Okay, ethics in auditing. We have International Accounting and Assurance Standard Board. Functions are different. IFAC functions are different. IASB functions are different. ISA functions are different. They will, IASB states what they will do. They are talking about two things. One side they will set the standards, and another side they set the quality. The quality control. Is it right? You have on a separate side, you will have a code of ethics. Fine. Now, coming to that, remember that external audit is an assurance agreement which provides reasonable assurance. This is what we have done in the previous lecture about the truth and fairness of the financial statement. Most companies have to have external audit by law. It is otherwise called as a statutory audit. There is not all companies need one. Example, small companies. Is it right? Small companies, you cannot say that if you take the small companies, trading companies, they need audit certificate, but they do not have, they should not be a, that external auditor has to do, they should be a, in, if there is, if we have to be very clear, listed companies. Is it? Listed companies on stock exchanges. The stock exchanges which have taken, which have issued capital, issued share capital, those companies, they need to do this by default. Others are doing fine, optional, but these companies are, they have to do it. Some people think that all companies should have an external audit. That is not the case. Look at the arguments for the small and medium. Okay, look at the, now, are you clear about this?
Yeah.
Okay, next. What is a, what are the duties? Is that now you will have the same thing repeated in a little bit advanced form. Auditors are required to report. We are doing only audit on the financial statements. Then there are various according to the national regulation, but typically audit or national regulations as a commercial company law. Okay, commercial company law. Every country will have their own law. First and foremost, we have to focus on commercial national law. Then we have to focus on international law. When the financial statements has been prepared in accordance with relevant legislations. Is that what you will do? You will come to a national law. Is it right? Then you will say it is IAS. Then you will say it is going to be IFRS. Then you will say financial reporting framework. Putting conceptual framework. Is that concept? Again, I will say, is it right? You have that figure which you have to pay. This divides. This gives a complete picture. I will post this on the group today only. Okay. I will post this on the group. What is the 1 minute? Where is that? It is there. You got it? Just check WhatsApp.
Yeah.
Is it
We
right?
got it.
Okay. This is the conceptual framework of financial reporting. The complete summary is there. Is it right? The complete summary. We are talking about the objectives, qualitative characteristics, elements. We are talking about assumptions, principles, and constraints. Is it? Assumption. This is the conceptual framework. This will be there for the. Now that is the first point. Okay. This is needed to understand the subject. Is it whether the statement of financial positions shows a true and fair view company assets at the end of the period and we are talking in terms of profit and loss account, and maybe you have coming across this for the first time, OCI. If you have done financial reporting, then you will have a concept of a other comprehensive income in the profit and loss account. Is it right? In the profit and loss account, there are two things are there. Profit from operations will be there, and you have OCI will be there. Income from other sources, income from non-operating sources. Is it right? Then you
That's
will,
interesting, right?
yes. Is that if investments, fair value, all this will revaluation, all this will come. Then it will going to be called as a profit for the year. Is it? Other comprehensive income. This is the separation what we have to do. Okay, that is what it says. Fine, we are not covering that as a matter of fact. It is not. See, I will say very clearly, it is not going to be there in any way. Okay, in any way, to my knowledge. Okay, whether adequate accounting records has been kept and returns adequate for the audit received from branches not visited by the auditor. You have to be, see, you have to be, make it clear, the general ledger is, general entries are very important. Okay, the general ledger is very important. We have to focus on the general entries only. The backbone of this profession is only general entries. You have to be good in what debits and credits. Fine. Whether there is whether the accounts are in agreement with the accounting records and returns. Is that whether it's the agreement with what you have done as per the records and as per the returns. Means returns is nothing but what you have been submitted. The information, whether the information of director report is consistent with the financial statement. Director has to be a report that yes, we have prepared as per the every annual report. If you see your own company's annual report, the first thing is we are preparing the financial statements as per the international national law. Then we'll come to IAS and IFRS. The director, see what are the things, the annual report will be signed by the directors, is it either by the directors or by the chairman. When chairman is signing, he will sign on behalf of directors. He will not sign as an individual capacity, on behalf of the directors. Isn't it? On behalf of the directors, the chairman will sign, stating that we have prepared that. Whether the disclosures of the director's benefits has been made. See, directors will get remuneration. Is it right? Directors will have two types of directors. One is your executive directors. Is it right? One is going to be executive directors. One are going to be independent directors. If you see the financial statements, okay, if you see the annual reports, in the annual reports, last few pages, is it right? Last few pages will have some annexure. This annexure will give the director's information, including they will give the remuneration, how much each director is paid. In the examination, one question in all the last previous examination, out of 10 examinations, 5 examinations or 6 examinations, they will ask what is the substantive procedures. Substantive procedures of directors' remuneration, because they get a huge amount. They get a huge amount that they should not get the benefit at the cost of shareholders. That has to be very transparent. This has to be very transparent whenever the director's remuneration means they have to make in accordance with the regulatory requirements. We go further, is it right? Auditors, when we say the things, auditors need certain rights in order to carry out their duty. They should have independence. Most important is that they have to be independent. They say that these rights were recording from country to country, okay? But what are the regulations? What are the rights they have? They have the things 1, 2, 3, 4, 5. Take it as important. But don't cover all the things also, okay? Cover other things also. They have the right to access books, accounts, vouchers in whatever form they held. If auditors will come and ask you this information, you have supposed to give, as simple as that. Is it right? All times. We cannot say that no, this information, you have the information and you are going to say that this information I will not give. It cannot happen like that. Auditors a right to require company officers such information as they think, which is going to reflect on the performance of their duties. You are an auditor, you are doing some job. It is the job you are doing as per the engagement terms and conditions. As per the audit engagement terms and conditions. If you are asking any information, the auditors have to, the officers has to give information. Not only they should give information, but also they have to give explanations. I cannot say that I will give the information, but if you are not, you need further, you have to give explanation. Now, what is the auditors? They have the right, they have the right to AGMs, general meetings, any general meetings of the company, and they have to receive all communication with respect to the meeting which any member of the committee is entitled to receive. In most of the cases, auditors will be part of AGM. They have to be. That is a good practice. They will be part of the AGM meetings. See, it gives you a positive signal to the shareholders also. That yes, auditors are, the management is taking auditors into confidence. A right to heard at AGMs means they have the right to heard. They have the right to respond. They want to listen what's happening. They will be part and parcel. It is a three-party agreement: practitioner, intended user, and responsibility party. Is it? Now you can see this is what it says. It is a three-party agreement. Is it that? Auditor is a practitioner. Is that? It is a responsible party. Management is the responsible party. Is it right? And shareholders are the intended users. You cannot separate. You cannot say that yes, the practitioner will not be there. Practitioner is part and parcel of this process. Is it right? I will write this. It is a three-party agreement. Likewise, I will go forward, I will go backward. Wherever it is required, I will go. You show that if you attend all the classes, if you have a complete picture, you don't need revision also. A right to receive any written relation means you have to keep them informed. Understand what? Means always you keep them in CC. Always any communication is going on, to receive a copy of any written resolution proposed. It is not finalized, proposed that this has been going to be done. The auditors has to be ACC for all the resolutions. Is it right? The auditors has to listen. I will complete this and I will stop. Okay? I will complete this. Who may or may not act as an auditor? May act, may not act. may act a member of a supervisor, ACCA people, allowed by the rules of that body to be an auditor. See what happens, the government is also can give licenses subject to, some people are having licenses, they have the qualification, they have some certifications, they have the experience. Based on that, they will get an audit license. Someone directly authorized by the state. State is nothing but the government. Firms, you have big four, you have audit firms controlled by members of the authority of supervisory bodies. All the audit firms can act as an auditor. A firm directly authorized by the state. State means the government, okay? They can work as an auditor. Fine. Who may not act? They are talking in terms of a officer or director or secretary of the company. A director may not become an auditor, okay? Very important. Is it right? Very important. An employee of the company cannot be an auditor. A business partner cannot be an auditor. Why they say due to what? Why? Because of the ethical factors, okay? Due to lack of objectivity. Purpose is very clear. Is that our objective is to have an independent view, to have a fair view. Is it right? We say that why we should not be an auditor. You will have the close relation. You are an employee. You are a partner. Okay. You are known people. You should not have any personal relationships. Long-term association with the client. Is it right? What will happen? We will cover this in the next chapter. Familiarity. Fee dependence. You cannot say that. Is that I'm working for you, and intentionally my objective is monetary. My objective is not ethical. It's not my objective is not professional. My objective is monetary. We cannot do that. Is it right? And most importantly, non-audit services provided. What are the non-audit services? You are preparation of financial statements. You are talking in terms of management consultancy. Any other services, okay? Those people means you cannot club two things into one. Okay? Who are the people who are going to provide services? Who are people who cannot going to provide the services? Is it clear to you?
What did you write there under preparation of financial statements?
Management consultancy.
Oh.
Is it right? Management consultancy. 1 minute. Auditor cannot defend. Understand point? I will again say, auditor cannot defend a client. Is it? Auditor cannot be a witness. Understand? Auditor cannot be a witness. Either auditor cannot defend a client also. Understand point? Auditor cannot become a protector. Auditor has to be, most importantly, auditor has to be independent. Is it clear to you?
Yeah.
Fine?